All right, so let's take a look at the British pound, kind of following up on yesterday's session. So you'll see right here, traders, we've got the pound up here. It's a 5-minute chart. This is the foreign exchange. You see the expansion code right here as you look left, range congestion. Okay, market's pulled back into a sideways trading channel, red above, blue below. So the expansion code is surrounding price. Then you see that we get a bullish expansion move right here. Now let's look at two things. You can see clearly the thrust on this. So last week I did a breakout video for you to show you one of the ways to use this expansion indicator just for breakout trades. And as I pull it back over here, you'll see the value of the resistance at 25.98. Okay, look left, previous structure highs. And then you see the support down here at 576s. So we talked about how you can identify a potential bid above and then an offer below. Okay, and this is literally just a breakout, a channel type trade. Okay, so right here, the market breaks above, would have been filled on the long entries there. Most importantly, I want to show you the fib extension. Okay, there's the swing low prior to the initial impulse high. We'll pull it back down. And you'll see that the 127 price projection was 658. Okay, this swing high right here comes in 650. Okay, so we see the 127 relevance right there. Secondly, take a look again, what happens prior to a turn. Here's the higher low, then the market drives in, here's the higher low, here's the higher low, and then when it presses through that and makes this new structure low, gives us the lower low and the lower close, that sets up now the trade. Okay, now, those of you that are aggressive traders, as we walk through this, we'll go backwards. I want to set up the aggressive sell at C for you. Okay, so let's get rid of this line right here and get rid of this line. At this point, the X to A leg is in. Here's the retrace, A to B. Now, if I'm an aggressive trader, I take the swing high at A, pull down to B, and remember, we talked about the 647s, the value of the 786, and then consider bid-ask spread, as well as number rounding strategy. So this would have been a 645 to 43 sell. Okay, so market rallies back into the price point, and on this candle right here on the 5-minute, 330 is the fill. So right there, the aggressive sell at C is short. And as we discussed yesterday, stops are placed immediately above the swing highs at A. And then obviously the target is, where would AB equal CD terminate? So I can copy and paste that. If that swing high holds, then that's the reversal point at C. And then this projects down into around 615s. And you can see here, let's just use round numbers, 645 for the sell, 615 for the buy for profit. Okay, so we've got 30 pips of opportunity. 645 for the sell, 665 for the stop, 20 pips of risk. Now, I ran my projections. You see that the projection at the 127 is right at the 618 retracement, so we've got Ratian confluence there. And then this produces a bid zone. So again, on this, one of the ways to address this is to come in and use mini lots, maybe do 2, 3, or 4 here for partial, and then buy 2, 3, or 4 here for the second half, with stops below the swing lows at X. So this would have had to be a 579 stop. So basically 30 pips of exposure from this entry, 20 pips of exposure from this entry, and now we'll see if the market moves down into there to not only capture profits on the aggressive sell at C, but also look at the pattern completion for the buy at D. Okay, so right here, A, your sell from C has hit its profit target. Okay, so let's just call it 30 pips in the bank. Stop right here is canceled. And now that stop would come down here for the part of the position that is long. Now again, two things are going to happen. Either it's going to continue south, which means the second half of the bid gets filled, or it's going to rally from this point, which means that splitting your order up allows you to participate in this long entry. Market rolls lower, goes down into the 1618 at the 786. So the second half of the bid zone's been attained. Okay, and now we're looking at pattern completion here. Now, stop's not taken out, and initial target, 618 retracement of the C to D leg. So let's continue the replay. You can see it puts in a double bottom. And then right here rallies into the initial target. So at that point, again, ring the register. Part of the position is captured profits. And then we would look at this guy right here, X to A, drop it in for a potential extension into 665s. Okay, so pattern completion, aggressive sell at C paid, plus 30. Scalping portion right here out, plus 20. So plus 50 pips, still long, and an opportunity to trail stops. Now, where might trail stops go? Remember, this is a long entry. So from the long entry, we'll take a look at the retracement. There's the lowest low since entry, and there's the new recent high. So a trail stop below the 618 retracement right here would be at break even for the first half of the position. Okay? So right now it would be approximately 50 pips in the bank on the British pound, plus stops in at break even to see if we can get a follow through. Now let's see if we move back into bullish expansion, and you can see basically we're trading sideways right there. Okay, so nice overnight winner there in the British pound, 5-minute chart. The Trading Authority expansion code used to help identify the X to A leg on the breakout, and then the balance of it obviously just walking through based on rules of engagement we discussed yesterday.